And welcome to the Market Alert for Tuesday, 25th of August 2015. And that was an interesting day for a Monday, without a doubt. We saw the market down 1,000 points at one point, and even the market ceased trading as I sent out a note to let you know. At one point, I think it was about 2:15, somewhere around that, that the market ceased. All of a sudden, prices stopped coming through, but everything else was still trading. So I thought, here we go. We've seen this before. And Rule 48 came into place. And you can see the chart there. This is the live market action. In fact, it was moving that fast. It didn't actually draw on the chart. So I reloaded the chart, which you'll see in a second when everything gets back up to date. And there's the market down 1,000 points in the daily before the main event. And then the reopen the markets at 2:30, and the markets drive lower. So what's causing this? Well, it certainly isn't any panic. We've had that already in the background. The market down 800 points, and I'm just drawing in a few different lines here just to see where the market had moved from. So I'm just going to speed things up a bit. So we see prices moving lower, and then prices will stop. So there we see the market lower. We see the market had ceased trading 5 minutes before, and then we see the plunging committee, the plunging team, the PPT, the plunge protection team. And if you've never heard of this, I'm going to explain what it is in just a second. So here you see the market stop, and then you see the market rally within 5 minutes right back. This is the 1 minute chart. I was looking inside just to see what was going on, and you'll see the market retrace there, all within 5 minutes. So what's going on? Well, we used to be known as conspiracy theorists for all of this, but the plunge protection team is well known now. It was set up by Ronald Reagan in 1988. And basically they come in and they stop the market from doing what you're seeing here. When it gets a bit crazy and the market starts falling out of bed, the plunge protection team come in and buy the markets, just as they said on Zero Hedge. I'm just going to go back. I'll just mention this before I don't have to come back to it. But this is Tim Cook sent an email to one of the presenters on CNBC, Jim Cramer, and amazing. He was talking about how well Apple were doing in China, etc. And it's amazing that he was allowed to get away with this. And like I said, it says in the headline, it says, did he actually violate the regulation of fair disclosure? No doubt Apple lawyers actually had a look at this beforehand, but bearing in mind that Apple were down 75 billion, so any fine was negligible anyway at this point. And Kramer talks about this on CNBC, and before you know it, you've got a situation where Apple, by the end of the day, had a 150 billion round trip in the stock market. It's just absolutely staggering that they're allowed to get away with this sort of thing, but that's the way the markets are now. They are manipulated to the hilt. There's no doubts about it. So I'm just going to go back a bit, and like I keep mentioning Zero Hedge, if you want to be kept up to date with the real news of what's going on in the market, then this is the website. So let's just scroll down a bit. Some brilliant articles on here yesterday, and somewhere along here, it must be on page 4 then. It again, as the events unfold, they actually posted. Here you go. This is what's after. Here comes the plunge protection team, the PPT, and that's precisely what we saw. The market plunges, the PPT come in, and we see the market then lift off from the lows. In 5 minutes, it puts on 500 points, and there's the indices all being halted when I sent a note out. But the volatility yesterday was something else. I've not actually looked at the figure yet on the implied. The VIX went to 53, which is a volatility index for the CBO, the options, Chicago Board of Options market. putting in an all-time high yesterday on there. So this is what you saw at the start, and that's how the market then panned out. As you know, the market continued to move higher because brought back to life and resuscitated by the PPT. So again, no surprise to me. As I said yesterday in the market alert, don't be surprised if they bring the market back. Then that is precisely what they did. So let's have a look at this in more detail. So I'm in the 5-minute chart for yesterday, and something else I'd like to bring to your attention as well. You'll see that this is the start of yesterday, early hours of the morning, when we saw the S&P order come in, and then they plunged the market lower. You will see the PTIs are activated in the pre-market session, and the reason for that is the volatility in the pre-market session yesterday was like a good day in the official trading session. So I know one or two of you actually traded as well as myself, certainly towards the open of the afternoon session. So you can see there how successful this was. You know, there's about 7 or 8 trades there, and apart from this one, all the rest were actually profitable because of the levels of volatility. Here you see the plunge team coming in, and then the market brought back. The volatility too great to actually get any PTI signals for yesterday or any of the others because of the size and the range of the bars. I mean, 500 points or more on a bar, it's just not possible to do. The market did quieten down and then made its way back down towards the end of the session, but again, still very high volatility. So here we are in the pre-market session overnight. You can see we've had a PTI to the upside there. I'll come to that in a minute when we look at the bigger time frame. Market coming back and then trading higher, and again you can see still got a lot of volatility in this market. We've got another short there that comes down to the more than the scalp, and now you can see we're actually short in this one as well. So we've still got a lot of volatility. If I just mark this one back up for you and just find the PTI, you'll see there 62 points. That's a big move in a pre-market session. So there's still a fair amount of residual volatility in this market. Now, if we have a look at the overnight markets, we can see that the Shanghai is down 3.87 at the moment. It's been a bit lower. So we've still got this situation in the Far East where the Chinese market's been down as much as 4%. It's going back down again now. So we're down half as much again today as we were yesterday, and the Dow is going up. But let me just show you I'll find it in a second. Here we go. So the Chinese stocks are crashing again. The yuan is devalued again. Deposit rate spikes to record highs, and Japan denies G7 response is planned. I can tell you now, any G7, G20 is a waste of time. All it will be is words. You're not going to stop what's coming eventually in these markets. They can keep putting the PPT out to buy back the market, but eventually, and I keep saying this, no government is bigger than the market. Eventually, all bubbles burst, and that's what we're seeing here. So let's have a look, see if there's anything else about the overnight on this site as well, just to I couldn't agree more with Paul Craig there as well. They've become a corrupting force in the markets, there's no doubt. It's distorted the markets. They're no longer free markets, and then again you can see that yesterday they're not allowed to find fair value because the Fed will come in, or the PPT, and bring the market back up. They don't want this bubble to burst because it will show that the $4 trillion that they pumped into the markets during the last 7 years was a complete and utter failure, a waste of time, and the debt burden being handed down to the taxpayer and generations to come as well. So that's why they're doing their damnedest to move this market higher. Now everybody's blaming China, and certainly it's a major factor, but as we've just seen, the Shanghai is down 4.15% on the overnight, and you look at the daily chart, and the the Dow futures are actually higher. So what's going on here then? So again, the US PPT, the Fed, come to the market, or to the market's rescue, pump a few quid into it, stop the plunge, switch the markets off, gives them the chance to buy the market back. Tim Cook sends an email to Kramer on the probably the most popular business channel, and lo and behold, 150 billion turnaround in Apple's fortunes. Everybody wants to buy, and the market goes back up. However, that said, at this point in time, the market really can't go much lower because of the volatility, which we'll come to in just a second. Also, the reason, and again, it's self-evident when you look at it logically, 8% drop in Shanghai yesterday. The market is marked down aggressively. PPT come in, and the market goes back up. So it's not China that's the real reason for yesterday, as it's been portrayed by the mainstream media. It's certainly a fundamental part, but it's this rate hike. And this is what I discussed in Saturday's Market Alert. Any increase in interest rates is going to burst the debt market, the bond market. And this is what is spooking the market, is that Yellen may just actually be going to stick to her words and actually increase interest rates in September. I very much doubt it still. It's more likely to have more, if we have another bad day on the markets, it's more likely to be QE because the economic news isn't stacking up. And Bullard came out last week and said that the market is going to be data-driven. Well, come on, you've got 7 years worth of data and you want to wait and see what happens in the next few weeks. Well, it's just, utter nonsense. They're terrified, really, of actually increasing rates because just the prospect alone and the backdrop of China, you can see what's happened over the last week. So, and we're actually below the October lows of when the QE actually stopped as well, officially stopped. So the market is showing what I've said for years, that it's being held up by the QE money. And this is coming to light, as we see here in yesterday's activity. But that said, the market's got to find a bit of sort of have a pause, breathe, before it can either move higher or lower. Because of the implied volatility. So let's have a look at this and see what it came out. 23.65, we saw the spike for Friday. And let's just see what it registers for yesterday. 34.07, so more than 100% increase in the implied. The biggest ever one-day increase in the implied volatility, which indicates a potential market bottom at the moment. And we must have that bottom in place at the moment. The Shanghai down again 50% of yesterday's drop, and yet the Dow futures are moving higher. So when you actually knit all of the pieces together, you can see the manipulation, corruption that is going on in this market, simply holding it and attempting to move it back to the upside. So yes, an interesting picture. So advice for today really is the pre-market session, as I say, is showing enough volatility to actually trade that. There's a 3-point spread on the Dow though prior to this, but there's 127 points in the pre-market session. We're likely to see the volatility increase. Whether the market goes on for another slide today, who knows? It's a very interesting picture, but there's a lot of volatility around there. And I would also add the caveat that trading these markets, yesterday I was in, and I can tell you when it's fast moving, you can see 100 points in no time at all, and that can actually move against you as well if you get the direction wrong, the timing wrong, and also the slippage as well. So you may want to actually stand aside and paper trade this, because it's a completely different situation to normal trading. But there is a nice bit of movement in the pre-market session at the moment. Normally we wouldn't even consider this because of the narrowness of the market, but at the moment you can see the pre-market session is better than the main session because of the huge amounts of volatility and the size of the moves. So there you can see we were down 150 points on the market at the moment, and it's only 6:30 in the morning, so a lot of volatility still around, residual volatility from yesterday. And of course, no doubt, I would suspect that if they can update this or not, that there's a problem in China. Yeah, they can see there it's 455 now down, but it's come off the lows. It's been down lower this morning. It's been down to 3,000 3,004. We're now at 3,050, 71. So if it breaks, just a bit of advice here. Let me just turn this into a yearly chart for you. If it breaks the psychological 3,000, then we've got a problem, because we're going back to June 06. Is this? June of this year, not 06. 2nd of June this year, where the market was 75. Let's see if we can find somewhere where the market was below 29 there. So December of this year would see the market back at that level, and that would add to the downside. I don't think on the one-day chart. Let's see if we can get the one day. No, we opened at 3,004, and we've managed to rally up. So if this turns south and breaks the 3,000, then you can expect to see an acceleration in the Dow futures, which is moving the market at the moment. This is not the stock market. This is the Dow moving these prices, which is being reflected, of course, through the spread betting algorithms. Right, that's it for this morning. I will see you in tomorrow. So let's see what happens today. As ever, thanks for your support, and also for watching. See you in the next one.